Good morning, guys. Welcome to my channel. And it's Sunday morning, and I just thought I'd get a weekend video out to give everyone an idea of where I think things are heading in the markets. So let's just get right into it. There's really no point in talking about anything else. Let's just get right into the charts. And the theme that I want to kind of impose on everyone is I think that we're right there on the edge of the market making a major decision on where it wants to go next. And what I mean by that is the charts, a lot of the charts that I see are set up for a kind of an immediate reversal, and they're set up basically for that to take place next week. And that's why my last couple of videos, I basically have been saying, okay, I think this is the top of this bear market rally. And it doesn't mean that I'm necessarily right, and it does not mean that this is the exact top. I know I had some comments, people were saying, you know, you said it was the top and the market still went up. Well, yeah, I mean, I'm not going to say something's the top and call it, you know, the exact minute that my video, that you happen to watch my video, that's the exact minute that the top is put in. That's not how it works. I mean, in general, a market can be at a top and it can gyrate and consolidate in a topping area. It can run little, you know, we can do some stop raids, kind of pop above the top range price. We can drop. It doesn't mean that we're not near a top. I mean, if you're going to move up, if you're going to be in an area and not move substantially higher and just kind of pop, you know, you can maybe spike above and then fail and spike again and fail. That's still a top, all right? So that's when I say something's at a top or near a top, that's what I'm talking about. And if you watched my video where I called the top of the last bull market, you know, I didn't call it the exact candle saying, okay, this is the top. What I said is this is the area that we're at the top. And if it's not right here at this, you know, really close price level, then it's very, very close. So I think that everything's a risk reward, and it comes down to the point of, okay, if the market's going to spike higher and just go a little bit higher, then you have a little bit of reward to take that bet. And, you know, if you want to go long and take a little bit of reward on a spike higher, because the probability says it's going to go a little bit higher, that's your reward. And then the risk is that it only spikes a little bit and then it falls a lot. And that is the risk. So to me, when I evaluate a top, it's all based off of the risk reward. If there's a little tiny risk or reward to go a little bit higher, because we can spike and, you know, run some stops, things like that. But then the probability and the chart set up to have a major move in the other direction, then that's basically a top. So that's how you have to look at things, because charts can spike intraday and they can close. Excuse me. You know, they can run stops. They do it all the time. I mean, there's market participants are trying to run stops. So, all right, let's get into the charts. Here is the Nasdaq futures. This is something we'll know more, you know, here in a few hours. Today on Sunday, the futures will open up, and we'll start to see if I'm right, or if I'm, you know, if the charts, if I have my trend lines drawn out right. But what I see here in the futures is this bearish rising wedge, and this has been in play, this bearish rising wedge. This should break to the downside. Now, what I like to see is how we popped above it right up in here. Usually on a bearish rising wedge, this is a bearish pattern, so it's set up to go down. The probability says it will go down. And a lot of the time what you'll see with these things, in order to foil traders, because these are so easy to spot, these bearish rising wedges, a lot of people see this. You'll see them pop it to the upside and just spike it a little bit and run stops. And that's what I see right here on the futures, is they popped it. You can see they were spiking it on Friday. I think we opened up Friday all the way up here on the upper end of this bearish pattern, and then it instantly sold off. And you know, when the market opened up, it instantly sold off and started to sell off and headed down. So that's what I've got right there. And then here's something you want to take note of. So we broke the pattern on Friday. The futures sold off, and then in the last few minutes, they spiked it right back up to close pretty much on the, within the pattern. So if I go to let's just go to the 5-minute, you can see here is, I guess this is the last half hour or something like that. So we broke, and then in the last half hour of a Friday, they ran it up and closed it pretty much right there. So it leaves everybody guessing. The market loves to do that. Kind of leaves you guessing on where it's going next, and keeps it within the pattern. What I'm expecting, if I roll back down to the hourly on the futures, I think we're going to gap down when the futures open. But again, I'm just guessing. It's just because this chart pattern is set up. We broke it, we recovered it, and the way to trap money to the downside is typically with a gap down. We saw it. That's what we saw in this most recent crash. We started this most recent crash for the most part with a 1,000-point down day. I think it opened on a Monday, and it was down 1,000 points just out of nowhere, basically. And so I think that's what you got to do. And most of the time, to trap the bear money or trap the bulls, you need to gap down to do it. So I think that's what we're going to do. All right, let's look at the Qs. All right, the Qs. Here's what I got. I got this bearish rising wedge. So that's a pattern to pay attention to. And on the upside, we could adjust this. I mean, it could be adjusted maybe like this. If I'm kind of moving it around a little bit, but if I adjust it, let me get my lines right here, and then you've got a tag there, a reaction there, and then we broke to the upside, but just briefly, and then, but when I look at that, there's a lot of breaks to the upside. So what I'm going to do is I'm just going to move it up to here, and I think we're going to leave it right there. We have a reaction here, we have a reaction here, and then we have Friday's high. Basically when Friday opened, we had a reaction right there. So I'm going to leave it like that. And then on the downside, you can see we have a reaction right here. We have a reaction here. And then if I zoom in, you can see we have several reactions right here. And then we broke it and started to just struggle below it, but still closing right on it just about. I mean, each close for this candle was still pretty much right on the trend line. And then we popped it to the high and then failed. So that's a breakdown, and it's not impulsive yet, but this is what you usually will see is when you break down, you're either going to kind of chop sideways and do a back test. Maybe we do a couple back tests, or you just fail. And we did not just fail. It was not really just an impulsive fail. So now I think we just back test. Maybe we run up and tag this trend line up here, break just a slight new high right there, and then that's all she wrote. So we'll have to wait to see if that's how that's going to play out, or we just gap down, and if we gap down, probably going to gap down to this 204, somewhere right around there. I still see this as a bearish pattern. I think we're gonna fall. And the thing you have to really be asking yourself at this moment in time is this a V bottom recovery like we saw in 2018? If I roll over to the weekly, then, are we going to get something like this? A V bottom recover, and then just start to make new highs? As of right now, it looks like it, but V bottom recoveries also look exactly like bear market rallies. So if I go roll it back to the last bear market, something like here, this is back in 2007, 2008 when we started to see the crash. Here's your initial crash, and this fell, this fell 20%, and then we rebounded from the lows. We rebounded 23%. I probably didn't mark that out right. We fell, 21% down and rebounded up 21%. Yeah, about an equal rebound, which is kind of what we've seen so far. But that was not a V bottom recovery. We didn't just go on to make new highs. No, instead we we continued the bear market, and that was followed by a 14-15% crash, and then ultimately you got the big leg down. Every bear market has kind of the I gotcha moment, or the moment where the bulls realize that they're not in a recovery, they're not in a buy the dip scenario, and you get the panic selling, and that's when you get the big flush down. So we're either in a V bottom recovery here, or we're in a bear market rally. And if this is a bear market rally, we could continue to go higher. I mean, we could go all the way up and tag the all-time highs, or we could fail here. To me, the pattern right now on the hourly chart looks like we're going to fail here. So that's how I'm going to play it. Let's look at this XLV. This one, I just can't get any cleaner on a pattern here. Whether it plays out, we'll have to see. But this one is just this nice, clean, bearish rising wedge. You look at the price action that we saw on Thursday. It just was walking the lower range all day long. Couldn't really move much higher than that, but just was able to hold that trend line all day. And then Friday we popped it to the highs, and then that failed. And then again, at the end of the day, if I go to the 5-minute, we had kind of the end of the day ramp. We actually started to break the pattern again, end of the day ramp. I don't, end of the day ramps, especially on a Friday, I never trust. So whether that plays out for a stick save and it actually recovers that, or if that is just, if that's just end of the day market imbalance positioning, I usually what I do is I just discard this. I just throw it out. And so all we have for Friday was, basically came down to support. That's all I'm going to say for Friday is we came down to support. We're sitting right on support. To me, this one just screams like a gap down. I mean, that's what this tells me. It says it's going to gap down and not going to give people an opportunity to get short or add to their shorts, and not going to give people an opportunity to get out of their longs. So I'm short this position right here, and I'm down slightly, but I am short this position. I think we get that gap down and trap that money, and then it'll start to move down. So that's what I see there. That's XLV. That's your healthcare. And I mean, fundamentally, my wife works in the healthcare industry, and I know a few other people, and they're starting to lay off nurses and stuff. So they just because we're in a pandemic, that doesn't mean that hospitals are just booming with business. They're doing the bare minimums to cover the pandemic. All the elective surgeries that they make all their money on, and what keep hospitals afloat, they're not doing those right now. So hospitals are feeling the pain as well. And I read somewhere that hospitals are trying to get a bailout as well. So that's just basic fundamentals. But there's the chart that looks like a bearish pattern. Let's move on to Apple. I'm short Apple as well. And here's the reason why. When I look at the big red line here, that's your bull market trend line going back the last decade. If I roll out to the weekly, there's back in 2009. And then as I zoom in, you can see we just did a full back test to that trend line. We actually moved above it on the weekly. You can see this tail right here. We actually moved above it and then failed and closed still below that resistance line. So as of right now, that resistance held on the weekly. If we move over to, you can see it there on the daily, how we were chopping above there. We actually had to close above that red line, that big decade-long resistance line, and then still closed below it. So we failed, resistance held, and then here's the hourly. So the hourly, I've got the big red line here. We've got that marked out. I've had that line in place for a long time. I just changed the color from black to red. And you can see last couple of days, we were chopping up around there, just kind of running stops. This looks like running stops to me. You spike it, you pop it up, close it at bullish, gap down, run it up, break down. So you're struggling here. It's a battleground. This right here is a battleground where there's some buyers stepping in, but it doesn't mean they're strong buyers. They could possibly just be, stop raiders, basically. They're just running stops, making people think the market's V-bottoming, and so they're running your stop if you're short, and then but then the sellers step back in and smash it down. So you can see the end of the day ramp in Apple didn't even recover that trend line. So it's still in a bearish posture as of right now. And then we also have this bearish rising wedge. Now this bearish rising wedge on the lower side, I don't have a lot of reactions. I've got, you know, a couple right here, and then I've got 2 right here. So, you know, not a lot. And if I look at the daily, I think I only have 2, 3, I guess. But this is a cluster, so I just count that as 1. So I only have 2. So the lower range, or the lower trend line that I've marked out, is not the best, but the upper one's not bad. You've got a lot of reactions around it. You know, you held as resistance right here with those reactions again right here, and then you pop it, and then it was support, and then it failed. Here's your failure right here. See the volume? Always look for volume when you see breakdowns through trend lines, to see if, okay, is the market participating? Is there institutional buying or selling around that breakdown? It just validates the breakdown. Is it a breakdown? That's what you want to know. You know, if this was a breakdown and and the sellers are stepping in, you want to know that, because that should mean it will continue. And so again, here's, you know, see the volume. We had a volume spike on this candle, this breakdown candle, and then we just flagged out sideways. So I think we head down. I don't know if this lower trend line is going to act as any kind of support, but ultimately I think we head lower. So short Apple, and I don't know why fundamentally anybody would really want to buy Apple. I mean, ultimately they're selling consumer products, and the consumer is taking a hit. So I don't know why everyone, I mean, the consumer confidence has took a huge hit. Consumer spending's taking a huge hit. Apple sells expensive consumer products. So it's not some magical stock that can avoid a pullback in consumer spending. So I don't know. But anyway, short Apple. Let's look at Microsoft. Microsoft's got a nice clean bullish rising wedge. You got to, you know, here's the upper range, reaction, and then nice reaction right here. Lower range going all the way back here, and then several reactions around there. Look at the upper range. I like this. When you see this on the upper end, you see that pop to the upside. That's your trap, or that's your stop raids, or whatever you want to call it. You know, if you're short and you think this is a bearish rising wedge, they pop it to the upside, and you feel like you're wrong, you stop out, you cover your position, and then they smash it down. And if you're long and you think this is bullish, you buy it, and they smash it down. So that's the trick move right here. And then they sell off, it recovers, and then of course the end of the day ramp brings it right up to resistance. So this closed right at resistance. To me, I think we're going to gap down, and I think we're going to gap down out of this wedge. I don't think we're going to gap right down to support. We're at the end of the life of this wedge, of this bearish rising wedge, and that's pretty much the same across all these. You're at the end of the life of these things, so they have to make a decision whether it's up or down. And these are bearish setups, so they typically resolve to the downside, and the way that this looks like it's set up is to resolve by having a gap down. So there's Microsoft. This is your semiconductors. Same story, bearish rising wedge. Started to break, closed right at the trend line right here. So I think we have a gap down there. XOM, here's an oil play. We had a bearish rising wedge, and it broke to the downside. And look, this is what I'm talking about, where they pop it to the top. Okay, this is your stop rate. So they run it up there. They're shaking everybody out of their position that were positioned for the resolution of a bearish rising wedge. When they see that bearish rising wedge and it starts to form, people start taking positions up along resistance. They pop it to the upside. You feel like you're wrong, and then boom, it breaks down, and then here's a gap down right here. So we had a kickback though, so maybe this wants to do a kickback rally. I'll be probably looking to short this thing if we can get a kickback rally up to this trend line right in this area. And this is an hourly chart here. Try to point out anything else that's interesting. MGM, I'm short this one. And bearish rising wedge here. You've got it right there. Several reactions on the high side, and see the little spikes. They like to do that. They'll just spike. And yeah, I can adjust my trend line, but I can't really adjust it to capture as many reactions. So even if I adjust it to here, I still have these spikes here. And if I adjust it to all the way up here, then I only have two reactions. And a trend line, you need more than 2 reactions. So I like it right there. Well, so they spike it to the upside. That's running stops basically. And then here's your breakdown. This is nice. See, you had a breakdown, but it wasn't impulsive. And then so what they did is they gapped it right up. We opened the day on Friday back within support, and then instantly failed, and the volume came in too. So the sellers just, like, as soon as it opened, they just smashed it. And I actually added to my position on Friday when I saw this for a day trade. Basically, I added some and I closed it down here. That just helps the swing short that I have on this, because I'm able to be in the profit much sooner, and it allows me to ride out trades. But yeah, you can see we opened here and just smashed it right back down. So that's bearish. And so now what do? Well, we can kick back and do some back tests, or we can gap down. Now, if the rest of the market is set up and actually is going to gap down, MGM should gap down too. So I think we gap down again. I think that's where we're going to go, and we'll probably gap down to this level. This is a pretty clean level. You can see right there. Somewhere, yeah, right about there. So call it 1050. Never mind. We probably don't gap down that far. That's a huge gap for MGM. That would be a 20% gap. MGM probably gaps down to something like, yeah, I don't know. I'm not going to call it on that one. All right, let's look at gold. So I sold my Barrick gold position on Friday, and I did not take it home over the weekend, although I see some bullish stuff going on with it. I see some bearish action in gold. So let's look at the gold futures. This is what happened on Friday. You've got this rising trend line here, and we broke. Here's your breakdown right in here. If I zoom in, you can see we broke right here. There's your break, and then we back test, another back test. This is basically a back test, and then the impulsive failure. So that it closed in a very bearish, and with a breakdown of the trend. So I think we had a little bit lower. Where do we go? Well, I don't know. I'll have to examine these a little bit more, but I think gold goes maybe a little bit lower. And here's gold bullion. It did the same thing. You had this nice bearish rising wedge in gold bullion, and look at that. Here's the little spike, like I said, where they like to run stops to the upside. And then we broke. Now, not a crazy impulsive breakdown, but still it did break down. And we had a lot of reactions on the bottom of this trend line here. So a breakdown here is bearish. Now maybe we do kickback, then fail. But to me, that just says gold needs to go a little bit lower. It's had a really nice run. So if I look at the daily here, let's see where our trend line would be at. My chart got a little jacked up. 1570, I'm pretty sure, was long-term support on gold bullion. We can mark that out on the weekly. Yeah, close enough. And so, yeah, you can see gold has had a nice run, but look at that weekly big old tail. That is a shooting star doji. So if we get more selling next week and we get a confirming candle, then that would be a reversal candle, and probably come down to 1570. I think we'll probably hold there in gold. So I'll be watching that. Here's the daily, impulsive breakdown right there. So again, probably going to come down to this 1570 and tag it, and that would be your support. And let's go to Barrick here. So Barrick Barrick is set up bullish as of right now. You can see here's what happened on Friday. We gapped down 5 or 6%. I sold my position on Thursday. up here, and so when we gapped down, I was feeling good. I felt like my exit was correct, but then we ramped up, and just kind of closed within the same range that we've been in over the last few days. So this is setting up for a bull flag here. Here's your flagpole, and here's your flag, and I marked it out, the target for this flag, and it puts us all the way up to this resistance line of 28.50. So that's what this red line right here is. That's the target that I marked out. So maybe that's where it wants to go. Maybe we want to spike up to this 28 range and then fail, and then head a little bit lower. But again, Barrick's still bullish, gold is still bullish. I just think there's a pullback. All right, so that's what it looks like in the futures and gold bullion. Is I think we get a little bit of a pullback, and then it'll be a buying opportunity. And you can see here's Barrick on the daily chart. We're overbought. We're sitting around 73, so it would make sense that this is the area where we would get a pullback, and then from there we'll have to just see where that goes. If I look at the hourly here and mark this out, I'm not sure where my trend line went on that one, but maybe you got something like this. I'll have to clean it up a little bit. Something right around there. So maybe we get a pullback down to this 22 range. Potentially goes a little bit lower. We'll have to just evaluate this as it comes, but I think we're going to get a pullback, and I have major support on this. If you look here, there is from the lows, mark it out. Sorry about my chart. Yeah, you could even mark out the low here. Yeah, that doesn't really work. You could maybe say that was a tag of support, but again, I think we're going to get a little bit more of a pullback. So I'll tighten this chart up and put it out as we start to see where this thing wants to go. That's really all I got, guys. Longer video, but weekend video where I can really just evaluate things. And again, fundamentally, you got to look and say, okay, are we in a bull market, or are we in, is this a V bottom recovery and we're in a continuing the bull market, even though we did hit a bear market? Do bear markets just die, instantly, or do bear markets follow the slope of hope? All right, and that's what you have to really anticipate. Do we have bear market rallies that are meant to trick people into thinking that the bear market's over? Bear markets are not easy to trade because they come with these rallies that make you feel like you've missed out on the upside. And if you go and look at the SPY or the triple Qs and go back and look at the last market crash that we had in 2009, they all came with rallies that at that moment in time, people didn't realize fully that it was a bear market. If you were right here and we're at the highs, kind of where we're at right now, then what you really saw was this rally. You saw a little dip. This is maybe a buying opportunity before we make another move higher, but instead what came was the market crash. So are we, is this where we're at? Are we sitting right here? And, and that's really what you have to evaluate. So thanks, guys. Appreciate it. Give me that thumbs up and let me know what you guys think. And also, I'm starting to look into some real estate, starting to look at, I'm watching the trends ultimately. I've been a real estate, I've owned several rental properties and several properties in the past decade. I do not own any right now. I cashed out of those and was looking for, a market crash or prices to come down. And so now I'm kind of eyeballing that and just to see how the market's trending. It should be shifting into a buyer's market. And so I'm watching price trends and trying to evaluate you know, how that's going to play out into the general market, and looking for opportunities there too. So if I see any kind of trends in real estate, I might start to add some of that into my videos, just to give everybody a general macro thesis or a macro idea of where things are going. And all that stuff plays into stocks as well. So thanks, guys. Give me a thumbs up. Subscribe if you're new. Catch you on the next one. Bye.